Ouch. It's a bloodbath out there today, folks, and it hurts that little bit more after the little pump we saw yesterday. What a time to be alive. So, what gives? Why all this red? And why did the markets pump yesterday only to dump so spectacularly? Okay, well, the green candles yesterday were a result of the Federal Reserve raising interest rates. Yeah, true story. Now, Jerome Powell and his buddies raised rates by 50 basis points, the biggest raise for over 20 years. But the thing is, that was what the markets were broadly expecting. Markets love being proved right, and they celebrated yesterday by going shopping. Now, Jerome also teased us by effectively ruling out a 75 bips hike in June, which further added to the warm and fuzzy feeling. The problem is, reality then kicked in. Interest rates have further to climb. The huge debts that everyone from the US government down have racked up are going to become harder to service. Prices are going up, supply chains are still a mess, and Russia is still in Ukraine. These are not ideal market conditions. Now, there are a few other factors that I think may be weighing on the markets too, as if that weren't enough, eh? Now, the first is the fact that US Treasury yields are rising to their highest levels in 4 years. Now, this points to investors selling off risk-on assets like stocks and crypto to move into less risky ones like long-term bonds. Then there are also fears about the housing market in the US, which, as many of my American friends have been telling me, is going absolute gangbusters at the moment. Well, the fear there is that as rising interest rates make mortgages more expensive, well, people stop buying houses. As my American friends also say, you do the math. Now, the rising rates are also fueling fears of a recession, and to be fair to Jerome and the rest of Team Fed, I don't envy their job here. They have to tame inflation while also trying not to tank the economy. It's a bit like being a one-legged man at an arse-kicking contest, as the experts say. Now, the Bank of England is also saying that a recession is imminent, and I'm sure many other central banks are thinking the same thing. Recession-based yips are also being made worse by a higher number of jobless claims in the US last month than was expected, which suggests that the bounce back from the pandemic is not going as smoothly as anyone would like. And to cap it all off, the dip that all of the above factors caused also meant a whole load of Bitcoin long positions got liquidated yesterday too, only exacerbating the sell-off. Because that's what happens when you trade with leverage. So that's why all our net worths are down today, folks. I know it hurts, but this is crypto, and diamond hands are only forged in the heat of hardship, or, something like that.